Well, in what could be called as a tectonic shift, for the first time post-independence, India's right has now become the center. So how should one read into this Modi regime? What does the Modi regime mean for India, Indians and Indian stock markets? To answer that, I have a very special guest, someone who exactly 6 months ago on the forum indicated that it was time to buy fear and it was time to buy into equities. Madhusudan Kela of Reliance Capital. Madhu, what a delight to have you back on Equinox. Thank you for joining us. Congratulations, great call. 6 months ago, you were a table thumping bull.
Yes, absolutely. And I think that is what actually pays off in equities. As they say that, more than anything else, equity is about greed and fear. So you have to buy the fear, and at some point of time, we'll have to sell the greed.
But if equities is all about fear and greed, and you should always buy when there's blood on the street, right now, everyone is of the view that things will improve.
Yeah, I think, Nikunj, this has to be looked in the context of what the possibilities are. See, I think, India always had a latent and a big potential. I don't think anyone disputes it. What was missing was the confidence. With Mr. Modi coming as a Prime Minister, I think that confidence, that feel-good factor, hopefully is coming back, both in the people who are in the industry as well as the investor fraternity by and large. So, if you went to someone 3 months back and said equity mein dal de, so he was not certain that, whether there will be this kind of a landslide victory and whether, you will have a very, very good regime. But now when you go to people, at least that uncertainty is over. So people have started feeling good. And as that movie 3 Idiots says, all is well, all is well. And that works wonderfully. A lot of people have been talking to me in the last 3-4 days. And people have, ek baar karna hai. That Josh is back, both in the industrialist as well as in the investor. And that I think is partly, just very early days, is getting reflected in the markets.
So now that we have a new CEO on the saddle, Mr. Narendra Modi, the management has changed. What will change in the short term? What will change in the medium term? Because the problems are very chronic. They're very deep-rooted.
Yeah, I think again, you look at it, that in the stock market, what we've learned, you have to look at, before believing anything, you have to look at the empirical evidence of what has someone delivered. So if I come and tell you that I'm a great fund manager, you have to go back and look at my record. So there is a 12-13 year record of Mr. Modi. And there is something to believe as to what has been able to do in Gujarat, wherein agriculture has grown 10%, GDP has grown 10%, even in distressed and difficult time. So like this skepticism will always be around, and that is why market will not become what it has to become over next 5 years. Otherwise market will be, if there was no skepticism, if there were no doubts, I think the markets will be much, much higher than what it is today also. So those doubts will be there. But I am certainly not in that camp who is doubting it anymore. I feel it's only a matter of time before vital things which needs to be fixed will be fixed. However, I must tell you, the expectation are also running very, very high, at least in the stock market, that he will be able to quick fix everything. I don't think that quick fix will happen, but I am sure in due course of the time, whatever are the problems which are choking up businesses, choking up industry, and because of the issue of governance, I think that will get fixed. We have to give it time, we have to give it at least 3-6 months for the entire policy pronouncement to happen and execution to start. But I am not doubting that whether it will be fixed or not.
So in terms of policy pronouncement, in terms of cabinet formation, what are the signpost markets would be watching out for which will convince markets that the NDA government is really taking the right steps, they are building the right blocks?
Again, going by what he has done in Gujarat, again, that is one empirical evidence we have. I think the cabinet should be very, very good, and that is what the market is hoping and expecting. It should be a mixed of, what I am hearing is it will be a mixed of some technocrats, people who know businesses very well, and plus, a young, energetic team of ministers who can really take on these challenges. So that is not very far, so we don't need to speculate. In the next 7 days, we will know it all.
Whom do you want to see as the next FM?
No, there's no question of who I want to see. I am sure Mr. Modi has the wisdom to get the right person. I don't want to speculate on that name today, but I am sure he has the wisdom and the credential to get the right people in the job, and which is what he has been. If you observe one thing, that is what he has been saying. He has been saying, "मैं तो हमेशा free रहता हूँ." I think I will get a proper team which can execute this.
Fair point. Everyone is happy, everyone is excited, but everyone is sad also because markets are at an all-time high. The economic regime hopefully has changed, but there is no participation.
Yeah, this is the sad part, and this is what every time I have come with you and spoken with you. If you recall my interview, that's what we have been saying, that please
get your
buy,
asset allocation
please buy,
right, yeah.
Please allocate. But the fact of the matter is, people till the time equities is the only asset class. Higher the prices, higher the demand. Lower the prices, lower the demand.
That's the nature of the beast.
Yeah, there is no other business like this in the world, wherein the moment the prices go up, the confidence comes up, the demand comes up. But that's unfortunate part of our markets. But so that you are bang on. I think there are a lot of people who are trying to smile, but from internally they are not able to laugh because जो एक लेन चाहिए equity market में और जिससे आपका पैसा बनना चाहिए, given the shape of the markets, I don't think people have wholeheartedly been able to participate. And Nikunj, that is my biggest point. Look at the shape of retail investors. Like there is 1,25,000 crores of redemptions which have happened in last 3.5 years in mutual funds and in insurance business only of equity.
That's half the industry.
Yeah, I'm saying estimated number, but I will be wrong, maybe 5% here or there. That's big number. And where has this money gone? This money has gone into assets like fixed income, 8%, 9%, RBI bond, gold, real estate, but equity ownership has to be back. और इसमें मैं आपको सबसे important बात बोलता हूँ, which is my experience of last 22 years is, अगर पड़ोसी का पैसा बन गया वो सबसे बड़ा लफड़े का कारण है. Then there is a compulsion for people to put money. So you will say that someone has made money, you can reject him once, you can reject him twice, but at the moment he realizes कि बहुत ये तो बनाते जा रहा है, then he will say, okay, you tell me what needs to be done. Now that feeling, I am sure, will catch on to a lot of people. Even institutional investors, even if your fund is like 100% invested today, but you are not 100% invested because you are playing the fear of last 5 years. You look at majority of the funds, you will find tons of defensive stocks.
Only IT, only pharma, only consumers.
Yeah, because that has been the trade for 5 years. And it took 5 years for people to change their portfolio. So in 2008-9, it all looked local domestic stocks because that was the frenzy. But it took like 2013 to change the portfolio. So these are very early days. अभी तो शुरुआत भी नहीं है.
Millions of retail investors who are watching this show are perhaps of the view that in the short term, our market's discounting all the good news because we've seen a one-sided move on the Nifty from 6,000 to 7,200. For those who are planning to buy now, should they wait for the decline? Has the bus left the station? Or in a bull market, you should not wait for a decline because in a bull market, declines never come.
Again, I'm not trying to be diplomatic, but the answer will depend if you already have an adequate good allocation to equity.
Let's assume someone has no allocation.
No, then you have to start.
You have to start now.
Timing करते बॉस को कभी किसी ने टाइम नहीं किया मार्केट को, तो टाइमिंग करते जाओ. सबको पता है घटेगा तो ले लूंगा, पर अगर बढ़ने वाला है तो घटेगा ही कैसे?
So buy now if you don't own stock.
If you don't own stock, then you have to buy. You have to start participating. And again, the best way is to use every dip, like people have used every rise in the last 5 years to get out of equity. Now every dip has to be used as buying opportunity.
Do you think a bull market has started?
101%. I have no doubt in my mind.
Are you a table thumping bull?
I am. I was 6 months back. That was a more opportune time. But I think even today, I think there should not be any doubt in people's mind that whether we are in a bull market or not.
So what is your definition of a bull market?
The breadth of the market, the participation, the way mid caps and small cap companies are participating, and the way the hunger for equity is already visible. People are the big mood question is, should I go and buy tomorrow morning? But people are not able to take that call because सबको लगता है ना बॉस 50% बढ़ गया. अरे बॉस 100 रुपए वाला 5 हो गया था. और 5 वाला 10 हुआ है या 7.5 हुआ है.
So rather than looking at how much we moved in the recent past, the right way to look at the current market setup is where earnings are moving and how much more we can go from the current levels.
Exactly. And if what all is there in the ecosystem and what all we understand, there is still a long way to go in terms of today we are discounting GDP at 5%. What happens if the GDP growth rate projection itself goes up to 7.5%? You have had virtually very dismal corporate earning. What happens if people start to incorporate 25% earning growth in their model?
But in the short term, can markets hit a pause button? Because what we've seen in last 3 months is that we've seen a big mean reversion.
Very unlikely, Nikunj. I think broad markets can, because there is a significant overweight of IT, FMCG, and which is what the point which I said you last time. The one index was 51,000 and the other index is 12.5. I just did the math even today. So that 51,000 has gone to 47,000 and this 12.5 has gone to 16,000. So still we are at 16,000 after so much halla gulla and noise that markets have moved up. We are still, that 22,000 is still at 16,000. Broad as an index as a whole.
I've never heard you that bullish.
No, it's not. I think this is a change. This is very different, Nikunj. We never had a mandate of this nature in the last 30-40 years.
It's a lifetime opportunity.
It is. From a market perspective, I can tell you. However, we will have to still give market time, because as you said, there are also plenty of problems to be fixed. So all the returns are not going to come just because I am bullish. Please don't hear me and say that tomorrow morning I have to go and put all my money. But if you are not participating in equity and if you are just waiting that if it falls, then I will buy, I'm afraid you might miss the bus.
But what we've also seen in last 3 months is that we've seen a general mean reversion. PSU banks, PSU industrials, economy related stocks, high beta stocks, everything has moved up in the same vein. For the moment it appears that it's a rising tide and the rising tide is taking everything up. I'm sure some degree of mean reversion would kick in. There would be a time when markets would like to separate wheat from the chaff and boys would be separated from the men.
Sure, absolutely. And that's what I'm saying. So before the idea of feeling bullish is not that you go and buy everything which belongs to this category of stocks. But if you buy good company, then and hold it. The point is that just because some stock goes up 25 or 50%, it is not time to say that I have made my 50%. Let me look for another one. My friend Rakesh Junjunwala always told me one thing, that in a bull market, it's not very easy to find good companies and good winners. So if you have found one, all you need to do is just sit tight.
Have you found yours?
I have found many of them. I have found many of them.
So how are you allocating capital?
As I said, that in the fund, we are still not yet getting huge net inflows, but whatever we are getting on an incremental basis, I think we are buying good large size mid cap companies, because that is where I think a lot of action will be. This is again a characteristic of the markets. Whenever the retail money comes, whether it comes from retail investors, HNI investors, it comes in mutual funds, or it comes in insurance business, maximum participation is seen in companies which are mid-size, which are mid-caps. So we are back in business.
Let me just pour cold water on your bullish argument, which is, can the governor spoil the party? The governor time and again has indicated that he is not comfortable with the inflation levels. Whereas we continue to write obituary for the UPA 2 government, the grain of the truth here is that the UPA government suffered because of not macro problems, but because of high inflation. Inflation is still sticky. The new inflation regime would be now coupled with CPI, and CPI again is dependent on food prices.
Nikunj, this is a very short-term view which you are taking. I think in life or in markets or in economy, you are either in one cycle. Either you are in a vicious cycle or you are in a virtuous cycle. I think we are coming out of that vicious cycle, because we are not attracting money. Rupee was going haywire. Once rupee was going haywire, inflation was going haywire. When inflation was going haywire, your interest rates were going haywire. And because people could not afford interest rate, they were not putting in money. So we were in a virtuous.
You were getting twisted from all ends.
Yeah, you are in a vicious cycle. The moment you fix two or three components of this vicious cycle. So what will get fixed? One, I think inflows will get fixed.
Inflows?
Yeah.
Okay.
There's trillions of dollars which have got printed in the world in the last 5 years. It is clearly looking at some home. Okay. So people are only still estimating incremental. तो लास्ट ईयर 10 बिलियन आया था, हो सकता है इस बार 12 आ जाए या 15 आ जाए. आई एम थिंक व्हाई 30 बिलियन कांट कम.
Let's not rule it out.
Between FDI, between debt and between equity. The moment you fix that part of it, then you have ample liquidity. You have ample liquidity, then you will be able to ease off interest rate. And obviously there is no, and markets get worried about inflation or market gets worried about interest rate. When you see some big delta up, so if inflation was expectation of 6%, it could go to 12%, then you are worried. You are not worried whether 8.5 becomes 9 or 8.5 becomes 8%. So I think the trajectory of inflation, as I can read it, is trending down. Now RBI may react after 3 months or 6 months saying, okay, now we are comfortable and we can reduce interest rate. The other portion which is linked to this is equity markets. See, for a corporate, he was completely squished. A, the business was doing badly. B, interest rates were high and availability of debt itself was a big issue. And C, equity markets were closed. So I think if these two levers come by, which is equity markets have opened up today for good companies, and I'm sure a lot of good companies which have not got fractured in the last 5 years, and they have been bear market survivors and who are wanting to raise equity. I think markets are open for them and they will be able to raise equity. And my hope is that the people who have survived, there is going to be a business case for them to have significant rise in profits over the next 3 years. So if these two things get fixed, interest rates, even if they come down after 3-6 months, I don't think it is any major or big concern.
In general, there is a belief in the market that NDA regime is a better regime for PSU companies. They give PSU managers higher autonomy. PSU companies currently have a lot of cash on their balance sheet. General belief is that NDA government or Mr. Modi will be able to galvanize the entire PSU space. Sure. Do you agree with this assessment?
Yeah, I think partially I agree, because we have to again say that we are coming off a period when these stocks have been beaten down and there is a lot of indecision making which were there around this sector and the companies. So they will benefit. Second is, almost all PSU companies fall in the basket in which I am telling you that there is no PSU company I can think of which is in FMCG, or there are not too many in IT space, there are not too many in the healthcare side. So majority of the PSU companies are in this investing basket. Thirdly, obviously there is a lot of inefficiency which has creeped into the system because of indecision making.
Can he change it? Can Mr. Modi change it?
Again, there is an empirical evidence. You have to go and see how Gujarat state public sector companies are run.
That's a very small example.
No, but
India is a big country.
But still, there are examples. See, the question is mindset. If you can run 10 companies well, there is no reason to believe why you can't run 100 companies well.
Fair point. The biggest proxy to any economy is the financial sector, banks.
Yeah.
Private banks are expensive. PSU banks have their own set of problems. The NPAs will not disappear magically. You own some PSU banks.
Yes, we own private sector banks also. They are expensive in relation to the past.
Yes.
They are not expensive in relation to what the future which we are looking at.
So don't look at past, look at future.
Of course, otherwise you can't buy stocks. If you are only looking at past, everything will look like a sell to you. And that is the problem with the analyst world. Because they will look that 2 quarters good number will come and then I will upgrade it. But stocks are not going to wait for me to upgrade, then I will be able to upgrade, I will be able to get all the numbers in place, still the prices will be there. It is all about anticipating what the future could be and taking that bet today.
What is your take on valuations? Because good news and good price, like you said, it rarely comes together. At what price point you would say that, look, the valuation comfort is missing? Because if I look at the historical average, we are trading at about 14-15 times. 14-15 times, again, based on history, is not expensive.
It's still a long way. I look at this thing in 2 parts. A, I look at valuation in terms of participation in the market. And we have spoken enough that the participation is completely missing, and it is definitely missing in sectors in which we discussed. Okay, so there is still a long way to go, because valuation will also be a factor of if 100 आदमियों को अंदर आना है and 99 आ गए, 95 आ गए, then even 14 times could look very expensive. पर अगर 100 आदमियों को अंदर आना है, उसमें से 5 भी अभी तक नहीं आए, तो इवन 20 times may look cheap. In 99, 2000, 2001, when I was a very, very immature investor, at that time, I ended up selling a lot of my technology stocks at 25 or 30 PE multiple, saying that this is a big valuation. Then eventually the stocks went to 200 PE. So the maximum money was being made between 25 and 200 PE.
Fair point.
Not between 15 and 25 PE. So what I'm saying is, valuation is a factor of a lot of things. So I will not be sarcastic or scared about buying into these valuations, because there is still a long way to go.
Your Facebook status is always a mood indicator of Madhu Kela's thinking.
No, I think I talk to you more often now these days, so there's no need to go to Facebook.
I haven't seen that status getting updated in a while.
The status is bullish, so there's no change.
So, final question, those who track Madhu Kela, those who always look forward to you for your advice and your wisdom, 3 things they should do and 3 things they should not do now.
I think, as I said, 1, 2, 3, what they should do is evaluate their equity exposure. Make sure that you are aligned to what inflection point in this country is. Otherwise, there will be a lot of feel good. Like when I go and stand in Marine Drive, I still get the air, but the flat doesn't belong to me by standing there.
Such a good example.
So you don't want to be standing there when things are happening. You have to be doing things. Until the time you invest money and make some money, all this change means nothing for you in person. Okay, so you have to get the 1, 2, 3. You have to get your equity allocation right, assess your risk appetite, have a long-term view, and get invested into equity. What you don't have to do is have unrealistic expectation. That just because I've invested money, I can compound by 50%, 100% per annum. Equity is a very specialized business. So till the time you are sure that if you want to do it on your own, be sure that you are able to do justice to that job. Because no one makes money on hearing phone calls and getting tips. In the bull market, it may look like that you are making some money, but it doesn't come so easily. So you have to give it to people who are really specialists, and they are doing it for 1%. So where is the need to really go and do it for yourself? So those are broad things I would say. Third is about timing, कि एकदम मैं घट जाएगा, किसी ने आज तक देखा नहीं है कब घट जाएगा और कब कोई ले लेगा. So if you're not able to time it properly, make sure that you systematically invest, that so that you don't miss on the bus.
Fair point. Madhu, it's been so nice to have you back on ETN, and thank you for wonderfully walking us through what an investor should do and should not do.
Thank you, Nikunj.
That's it on this edition of Market Makers. That was Madhusudan Kela of Reliance Capital. Thank you for watching the show and have a lovely day ahead.